Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Scot Warren. He's the Chief Operating Officer of the Options Clearing Corp to discuss the OCC's record clearing volumes with over 98% of its employees working remotely and how it strengthened its resiliency to prepare for COVID-19. Scot, it's great to have you back with us, and it's quite incredible to see the volume that you have cleared and adapting to a work from home environment so quickly. What was that like for OCC?
Well, I can't tell you how incredibly proud John and I are of our colleagues. It's not just COVID-19 and a business continuity event and working from home. We're dealing with an extraordinary market move. When we talk to our risk management folks, this is our moment to shine. The market move actually exceeded what happened in '87, and 7 of the 10 largest volume days in OCC's 45-year history have occurred since February. So there's extraordinary volume, really increased volatility, and 98% of our workforce working from home really reflects the investments we've made in our technology infrastructure to provide capacity and resiliency. So it's been an interesting time, and we're really proud of what we've been able to accomplish.
How did OCC strengthen its resiliency to prepare for COVID-19? Like you said before, it isn't just one specific event, but it is the investments that you have made throughout the years to arrive at this moment.
So we have a business continuity team that's staffed with former government and military officials. We actually do quarterly tabletop exercise. The fourth quarter exercise was a global pandemic. So we really thought through what our staffing profile looked like, how we'd operate. So we were prepared for it, but we're in the middle of a Renaissance initiative where we're rebuilding our technology infrastructure. The first thing we did is invest in our legacy Encore system to provide hardware so that we would, and invest in the processes so we'd have additional capacity. So, average daily trading volume last year was something around 19 million contracts. Year to date, we're at 28 million. So we've really invested in expanding the capacity of the system so that there's no availability issues. But it goes back to starting with tabletop exercises in the fourth quarter, investments in our VDI infrastructure, which really provides our remote workforce full access to our systems and capabilities. So it's a credit to the business continuity team to work with the business leaders and the control functions to make sure that we're able to respond.
Now, Scot, you received SEC approval in January of OCC's new capital management policy. How will the new policy enhance OCC's financial resiliency?
Well, importantly, it resolves the issue of how the minimum capital OCC needs to operate. In terms of resiliency, it does one really important thing. It provides OCC skin in the game, which is we put our corporate assets immediately behind, in the unlikely event of a default, immediately behind the pre-funded resources of that defaulted clearing firm. Unlike other CCPs, we've also put in management's executive deferred incentive compensation pari passu with the clearing firm. So management's fully aligned with our clearing firms and then our corporate assets. So it extends the pre-funded financial resources we have available and clarifies the way we operate our capital for market participants so they have greater certainty of our operational resiliency.
Another example of OCC's ability to get things done is the announcement you made in May regarding a new distributed ledger technology DLT solution for your securities lending program. Why was that important?
Well, we're presently the only US CCP that provides stock loan clearing services. And as we've talked to market participants, they want to expand that service. We also understand their pain points around reconciliation and balancing, right? And so we've worked with them and explored distributed ledger technology, and we think that's going to provide an innovative solution. So we've really worked with the market participants on the expansion of the program they need and the technology infrastructure that will allow us to meet that in the most effective and efficient manner, as well as gain more familiarity in our own enterprise with distributed ledger technology. So it's really a function of Matt Wolf and a team working with market participants, understanding the enhancements and the benefits they want to see, then working with our technology team and our partner in Axoni to deliver a solution.
And Scott, to wrap up, what other work has OCC been able to get done on behalf of clearing member firms and market participants?
Well, obviously, making sure that we have the right pre-funded financial resources is critically important. We're renegotiating and extending our credit facility, bank facility. We're also replacing CalPERS in the non-bank credit facilities. And so we'll have an announcement with New York State teachers about their participation in our credit facility. Then importantly, we're addressing the manner in which we size the credit needs for OCC. And we're doing that on a basis that's very consistent with our stress testing methodology and clearing fund sizing, so the market participants can understand and we can forecast liquidity needs in a stress market environment. And we look forward to implementing that at the end of this quarter. So we're making progress on a lot of different fronts, and it's a credit to the team to not only be able to continue the critical services, but think through the eventual needs of market participants. So like you mentioned with our investment in stock loan, as well as our Renaissance initiative of really rebuilding the technology stack. And part of that is making sure that the way OCC's models and methodologies work today will be carried through to that Renaissance initiative. So we've done a lot of work with our model library and model inventory on the technology stack supporting that. We've got a framework where the code's written for each one of those models. It's used in Encore today. It'll be the same code that's used when we develop and implement and cut over to Renaissance. So there'll be no change to market participants that are unanticipated because we've recoded models or made those types of changes. So the team's working incredibly hard to continue to deliver the critical services, but also make the ongoing strides we need to meet market participants' expectations for us going forward. And it's really nice, you know, is for us as the organization to hear Chairman Powell and, Jay Clayton and Heath Tarbert, when they're talking to the Stability Oversight Council about how well CCPs performed in March, right? And so we weren't a source of stress. We have provided the operational resiliency and capacity to meet the market needs. So it's nice to hear we and the other CCPs have performed particularly well during a period of stress.
It certainly is, John. Great to have you, Scott. Great to have you with us as always. Thanks so much for joining
No,
me.
it's the beer. John and I are now getting confused all the time.
I know. And I was just thinking to myself, you know, all the best to you, John, and the members at OCC. It's great to catch up with you as always.
Thank you so much, Jill. It's great to talk with you.
All right. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.